app. There is so much detail and analysis. But let's swiftly move on to the latest earnings news. We've just heard from the oil giant Shell reporting profits in the third quarter of some $6 billion. That is better than expected, but lower than the previous quarter due to weaker refining and oil trading that offset their higher sales from gas. Shell says it will buy back a further $3.5 billion of its shares over the next 3 months at a similar rate to the previous quarter, and it's keeping its dividend unchanged. Well, let's analyse all of this with Cornelia Meyer, economist and independent energy expert. Lovely to see you live from Riyadh in Saudi Arabia, Cornelia. So give us your take on Shell's numbers. I know you've had a good look at them since they were released.
Yes, thank you, Sally. Great being with you. I would say Shell did it again. It's the fifth quarter in a row that it beat expectations. And when you compare it to its peer BP, who really did worse, Shell managed to only, it's only 200 million. The EBITDA, the adjusted EBITDA is only down 200 million. The adjusted earnings only down 200 million. It's about 600 million above the consensus preview. So it did very well. What I also would say, yes, refining didn't do so well, but it didn't do as badly as was expected. It was expected that refining margins would be down by about 30%, and it wasn't that bad, and refining is tough. Let us also see the backdrop. It's a very volatile oil price that is way lower than it was a year ago, because the volatility comes in because of the geopolitical issues, mainly in the Middle East, which adds and subtracts geopolitical premium. The other thing is that there is just way too much oil on the market and not enough demand, which makes for a weak trading environment.
And just explain how Shell is navigating the tricky balancing act between keeping its investors on side, but also showing those who do invest in Shell or who may consider investing in Shell that it is on a path to become a greener company.
Well, it is on a path. It wants to be net zero by 2050. But I think where I'm very impressed with Shell is that they're on a path, they're on a steady path, and they don't make big announcements of we will go totally green now, and then they have to backtrack. They're just steady Eddie. They're just very steady, which gives them a big gives them a lot of credibility with investors. The other thing that I would say is they are they're keeping share buybacks, they're keeping the dividend, and they were able to pay back $3 billion worth of debt. You compare that again to its peer BP, who had to raise $1.7 billion of debt to keep investors on side. And let's be clear, investors want to see money. They want to see the almighty dollar.
Yeah, we know that. We're very aware of that. We won't dispute you on that front. Cornelia, as always, we're out of time, but we will talk to you again soon, I'm sure, as we pick your brains about the energy market going forward. Thank you.
Thank you very much.